Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. A lot to get through today. We had a Fed meeting. They did not hike rates. Fed Chair Walsh had a 60-minute press conference, which is a little bit weird considering he said he wanted to do less of that sort of stuff. What came out of it really from the analysts and things, Bloomberg, Reuters, etc., was Fed credibility is just shot essentially. And which saw long end bond yields go higher. So we've got the 30-year in the US reaching its highest level since 2007, and we had, basically that they're essentially saying that they're all talk, that they're not serious about inflation, and that the Fed's overall management is really being called into question. We had Meta and Microsoft earnings as well, as a slew of other earnings. Meta got smashed 8% after the close, and they actually missed on bottom line, and which that just never happens basically. So as you can see here. The stocks got hit, down 5.3%, 3-month low, down 30% from the June 22 peak, the worst month in 30 years, there or thereabouts. Decliners outnumbered the advances nearly 2-to-1. Volume was really heavy as well. South Korean circuit breaker yesterday, there's reports that the Korean authorities now are going to curb those leveraged ETFs, which is not surprising at all. And then obviously add to this is Brent was up sort of 7 or 8%. US crude inventories dropped 7.2 million barrels. An unexpected sharp draw on the US strategic reserves. We're now at a fresh low in the Strategic Petroleum Reserve, the SPR, lowest since 1983, and they can't go beyond 20 million barrels, so they've really only got about 280 in reserve. OPEC's saying that they're going to pause their production increases from October, and you've got the Houthis. Houthis were still blockading Saudi ports, adding that second choke point as well, and President Trump using some pretty colourful language on Fox News last night as well. And you've got a poll on US citizen or US voters' support for the war dropped to its lowest level at 34%, a 60% disapproval rating, and you've got the Republicans turning pretty hard on their own president as it stands at the moment. So look, loads going on, as you can see in the middle there. That's manufacturing, or in terms of chips, and manufacturing in terms of obviously data center related things, but also fairly industrial manufacturing got hit pretty hard. There are concerns given those higher long-term rates. See on the left-hand side there as well, the chip stocks getting hit. Oil was essentially, and a little bit of the staples were the only sectors that were up. We've got strong sales in all the technicals now for the US markets and the Nikkei and one of the China indexes. We had a really strong day yesterday. It doesn't particularly surprise me, and we've actually been pretty good overnight as well. We're only down about 54 points in the SPY, but we are a real assets market, and they're going to let inflation run. Then obviously commodities and things are going to will largely benefit over time. So Microsoft, so this was, and they were up 3%, and I think they've gone to being up around about 8% in the aftermarket after the earnings call on capex. I haven't had a chance because they didn't actually guide on next year's capex. It must have been good because they were only around about that 2 to 3% mark until the earnings call, and now they're up 8.5%, which is what's left, which is what's dragged the Nasdaq up a little bit in the aftermarket. But look, Azure was up 43%, revenue was up 18%, gross margin, largely flat, and as well as operating margin. EPS beat, revenue beat, and not by a massive amount, but they had their chatbot. Copilot, sorry, I got stuck there for a minute. Copilot growth and Azure growth, actually within about 5 to 7% of what their capex was. So, market being very comfortable with that. They've also pulled back on capex a little bit, and they gave away some leases, etc., last year as well. So, they are really the more disciplined side of the equation, which is why they've headed higher. You're rewarded for your capex. Discipline, and obviously you're rewarded for your actual revenue growth there. So look, this Microsoft still looks extraordinarily cheap. It's down quite a bit. It's down 24% for the year, and it's really been caught up in that SaaS apocalypse. But I don't really think that it's justified to be put in that basket. I mean, Microsoft's not just a software company. And there's been plenty of people have a crack at, the Office suite, and etc. So Meta was a different story. So daily active people was up 3%, ad impressions was up 14%, revenue was up 28%, but it was a beat by the smallest of margins, $500 million. And then EPS was a miss by $1. And capex was slightly narrower, but really it wasn't looking particularly good for them, and they just got hit from the absolute get-go, and they were kind of down before that as well. And Zuckerberg's got a pretty bad reputation when it comes to being fiscally disciplined. So there was and you can sort of see here, Microsoft and Meta were under pressure leading into it. So not good for Microsoft. Obviously, for Meta. Microsoft obviously bouncing about 8 or 9%. So Meta now the biggest lagger out of Alphabet, Apple, Amazon, Meta, and Microsoft across the board. And we'll hear from Apple tomorrow, but there's essentially by default they've been by not spending any money, they're kind of coming back into favour overall. This is what these big moves. I've touched on this a couple of times, but these big moves. I mean, obviously you saw what's been happening in Korea. We've had two circuit breakers go off in 2 days. We're having 5% swings every other day. We're not that far off this in terms of. We're not far off this in terms of the US as well. You've got US brokers reporting more than $1 trillion in terms of retail investors owing brokers over there, and there's not much in terms of fund managers on the bid side because they're one of their lowest levels in cash as well. This is not helping. This Treasury yields at 30-year highs. That obviously brings up mortgage rates, and it brings up what it's going to cost to generally, because a lot of these hyperscalers are doing deals on 30-year timeframes. For these data centers, if the government's 30-year Treasury yield heads higher, then look, corporate bonds are going to be that again. It's not good for those guys issuing debt, albeit that it seems to be getting pretty. It seems to be getting pretty full in that corporate debt market, and it's a little bit scary. So. We've got President Trump. This is one of the funnier tweets last night, but he said to Fox News, "We are going to beat the effing shit out of them," when he was referring to Iran last night. So there's concerns around the fact that they're kind of running out of missiles and things, but the attacks went on pretty hard last night, and Iran was I think there were attacks in. There were attacks against Egypt. There were attacks against the Saudis. The Houthis are blocking Bab el-Mandeb Strait at the bottom of the Red Sea. The Hormuz is still shut. And disgracefully, you had the energy secretary come out last night, absolutely lying through his teeth about the fact that 3/4 of the normal supply was still going out to market. There is not one piece of statistical evidence from any platform anywhere that supports that. That is just absolute horseshit. So don't be, but this is what the Americans are doing, and they're being bullied by Trump, and he's sending out his cronies telling people that it's going to be fine, when in reality you've got average gas prices now well into the 4s per gallon in peak driving season, and you've got an absolute voter revolt. They're actually even talking about like how they're essentially just talking about how much the Democrats are going to win by at this point, and we are expecting another government shutdown. So you've got a Fed without credibility, you've got a government without credibility, you've got a war going on. I dare say, I'm very surprised that gold and silver didn't rally a hell of a lot more last night, because the US dollar should be, really should be getting absolutely smashed. So there were other after hours earnings movers as well, and I'm just going to run through it. I must have forgotten to put the slide in here. I do apologize. Starbucks, top and bottom beat. They were up 11% after market. Fortinet, which was, Fortinet's cybersecurity, it was up 10%. It beat, raised guidance, etc. We had Lam Research, a very clean beat and raise. HBM and next gen AI chip equipment demand as well. Bucking up 7% in a SOX or Philadelphia SOX index market that's been getting battered is an absolute outstanding result. And then you've got Teladoc, which is part of the SaaSpocalypse, and part of a sort of MediHealth sort of sector. And I think in the mental health part was down 24%. They've cut their guidance, top line miss. So, the SaaSpocalypse is real for some companies that, where they don't have any advantage. Qualcomm was a slight miss. It was down 5%, and they had soft Q4 guidance, and they're losing Apple's business, which is their biggest customer, at a faster pace than expected. ARM Holdings beat EPS and a really narrow beat on revenue, but they still sold off 7%, bearing in mind they're up about 120% for the year. And Carvana, it was down 14%. They beat on revenue, but profit taking after a massive year-to-date run-up as well. So profit taking, obviously, so there's some pretty wild moves in this aftermarket. Apologies for not putting those things in. As you can see there, crude up 9%. We did close when I took the prices yesterday. We were obviously still down before those attacks wound up again overall. And as I say, gold and silver and the precious metals, I would imagine, given the lack of general credibility, with that central bank and what's going on in the US government at the moment, that's going to continue to go higher. I'm surprised the US dollar's not down more, particularly when they were expecting a rate hike, and now they're going to be Trump's effectively forced Wash into a very likely rate hike decision into the election, which is just going to smash the Republican Party yet again. And then look, if the Democrats control the House, then we're just going to have 2.5 years of impeachment hearings and nothing getting through, because you got houses controlled by different parties. It'll be basically, we'll just be at a policy standstill, and which will further erode the trust in America and the government generally. What didn't help as well, and apparently when President Trump came out in support of Kevin Warsh, apparently 30-year yields went even harder, and they're basically calling him, there was comments around him being, they thought he wasn't going to be a puppet, but puppet he is. So tomorrow we've obviously got Amazon and Apple. That's going to be the big one. Rio was yesterday actually, and it reported extraordinarily well. We've got Fortescue coming up, as well as Chevron and Exxon. GDP tonight in the States. Any form of inflation is just going to make this worse. in that core PCE. It should be pretty good because we did really have oil prices back off a little bit, but I mean, look, it is, it's a second revision, so we'll just see what happens there overall. And then basically once we've got Amazon out of the way, we're sort of through that CapEx thing, and we could probably start to see the smoke clear a little bit and have a few more certain earnings picks, but as I've been saying for months now, and Microsoft proved it and Google proved it. If you fiscally they don't care about EPS and rev, and the top and bottom lines. All they care about is the CapEx and the fiscal discipline. So look at, Amazon's massive, obviously, in that cloud space, and often they don't. When one's rewarded, AWS versus Azure, when one's doing well, then maybe they're taking clients off each other. So really interested to see what is going to be what's going to happen tomorrow morning. Covered a lot of this in the podcast last week. Well worth going to have a look and sort of understanding why all of a sudden we don't care about EPS and rev, and PEs are less of a concern, and when everyone's talking about free cash flow and things. So we sort of cover that in the podcast. It's well worth going to have a look. But yeah, sorry for going long, people. We did have NAB come out today and say 15% drop in home loans as well, and home loan applications, which won't be good for the banking sector today. But so I would be looking out for that overall. We do have RBA's Sarah Hunter with a fireside chat at Barrenjoey Economics Forum. We've got building approvals, Bank of England rate decision, Samsung earnings apparently are today as well. So we'll certainly have a look at that today. But yeah, busy day, a lot to take in. Thanks for listening, people. We will speak again tomorrow.